In this session, let's understand what is company and what are its advantages. If you want to run a business, you can do that through various forms of organization. We have different forms like sole proprietorship, partnership, limited liability partnership. These forms of organization are really easy to form. They are less expensive with less recurring compliance formalities. On the other side, formation of company is comparatively expensive and that would involve recurring compliance formalities and associated expenses as well. But despite those limitations, many entrepreneurs prefer company form of organization over other simple forms. Why? It's because of certain advantages. Before getting into those advantages, let us have a clear understanding of what a company is. If you go through Companies Act, an act which governs companies, Section 2, subsection 20 defines what company is. It's a very simple definition. The definition reads like this. Company means company incorporated under the Act, which is Companies Act 2013 or under any other previous company law. And if you go deeper into that definition, then you will understand that company is a voluntary association of persons and it has separate legal entity with a limited liability for members and it has got perpetual succession. Okay, so this is the broader picture of company. Now let's dive deeper into advantages of company. Number one is its separate legal entity status. Yes, once formed, company gets legal identity. So company becomes different from its owners. It becomes an artificial person and as a result, it can enter into contracts, it can sue persons, it can also be sued. That is advantage number one. Number two is its limited liability. This is another important advantage of company. Once a company is formed, the liability created by the company will not affect its owners because owners are liable only for the capital which they have agreed to contribute. If they have contributed all their capital, then there will be no further onus on them to meet the liabilities of the company unless they give some personal guarantee to the lenders or third parties on behalf of the company. Then comes advantage number three, ability to increase capital. This is another major advantage of company form of organization. In case of sole proprietorship, partnership and all, they cannot raise substantial amount in the form of capital. Their capital base will be very much thin or limited. They also cannot attract more investors into their business. If they run their business in the form of a company, they'll be able to invite more investors, raise capital and expand their business. Then we have advantage number four, ability to increase external funds and bank loans. Capital base of non-corporates will be marginal or very thin, already I mentioned, and because of that reason, they may not be able to raise external funds also beyond a particular level. For example, banks will be reluctant to give higher loan amounts to sole proprietorship, partnership because they lack transparency as there is no regulatory body to govern them or monitor them. But when it comes to companies, banks will have more confidence because of transparency provided right from their incorporation, because the incorporation of company means we get the clear-cut identity. Number two is audited financials because financials got to be audited by chartered accountants. Number three is filing of annual reports with registrar of companies. Here independent verification is possible. Number four is registration of charge created on company's assets and priority in the event of liquidation of company. Then comes advantage number five, ability to scale up business activities. Company form of organization provide more transparency and it provides more comfort in business to business transactions. We call it as B2B transactions. Suppliers as well as customers will prefer to transact with company form of organization than non-corporates when it comes to high value transactions. Then we have advantage 6, which is separation of ownership and management. See, company can have multiple investors and it is not necessary that all of them should take part in management of the business. They can entrust that responsibility to board of directors. This makes that distinction very clear, that is separation of ownership and management, and this will ensure professional management of the business. Then we have advantage number 7, that is transferability of shares. This feature gives two benefits to the investors. One is liquidity, the other one is freedom. If the investor needs money, he can sell his share in the company if it is tradable, encash and meet his requirements. If investor is not comfortable in continuing as investor, he can very well sell his shares and move on. Then we have the next advantage. We can also form something known as one-person company. Nowadays, you can also start a company as OPC, that is one-person company. Single promoter is enough to start, and it will get separate legal entity status, which is not available for sole proprietorship. Even limited liability feature is available in case of one-person company, and it can be formed with much lesser formalities. Okay, so in this session I have explained why starting a company will be more beneficial. In the next session I'll take you through the exact definition of company, then we'll get into the incorporation procedures.